Hello and welcome to the Stock Planner channel. Today I'd like to talk about Home Depot. I expect more downside ahead and I'm going to do a full analysis. Stay with me. Home Depot is a big box home improvement retailer. Everybody knows it. It's in every large town. It sells building materials, home improvement products, lawn and garden, tractors, which I'm looking at, and decor products, which my wife's looking at. Its customers are homeowners and professional renovators, general contractors, and me. It has a large website. It sells home decor products, all kinds of things. You can order online, pick up the store. And it operates around 2,300 stores. Recently, they announced that they expect slower growth over the next year. This is going to affect the price. And there's the price. Look at that downside over the last several months. These are daily time frame. And while the stock seems to be slowing up a little bit here, I think there's plenty of room to fall at least another $5 to $10, and I'll show you why I think that in just a few moments. So stay with me. And before we get started, I want to remind you that you should learn how to do this analysis, make your own predictions, because really nobody can predict the market. I have no idea if it's going to go down or up, but the economy does not look good. I don't see anything changing. I don't think inflation is going to stop dramatically. The Ukraine war might stop, and that might help things. Oil and gas and shipping is going to be all high during the summer. So I think all this will affect the stock price of Home Depot. What do you think? Leave a comment below. But the point of all this is you're responsible for your own trades. Do your own due diligence and learn how to do it and win. I'm only showing you my trades. Let's get started and do some analysis. Now I want to talk about a few things before we go in and analyze Home Depot. I have a stock list that I work from, and these are the stocks that are on it. There's Lowe's and Home Depot. And I think the recession started on around 1st of January. And this little column here is a change since 1st of January. And these are the 5, 15, and the last 2 month changes. So you can see that that's all red, and so is it from the first of the year. That's not good. Anyway, I have a good list based on those columns of stocks that seem to do well. Here's that list since the 1st of January. And I have a list of stocks that didn't do so good. And Home Depot and Lowe's are on that list. So that's on my bad list. And then I have another sheet where I am trying to project forward 90 days. In other words, I put in stocks and ETFs where I think that the stock or ETF will go up or will go down. And the Qs I think are going to go down. And in fact, I got a sell signal on the Qs in the last 5 days. The singles are the last 5 days based on my 3-bar strategy, 3-indicator strategy that is in the description below. 3-indicator strategy is on my free Discord, and how to set this up on your TradingView charts is in the description below as well. Anyway, these are I try to project forward 90 days on how I think things are going to go. China, the ports have opened, and I think it's going to probably open up, and it looks like, based on its performance over the last few days, the China stocks have done a little better. The energy stocks over the last couple of days have went down. Gas seems to be okay, USO, and then I'm looking at long term. But over here in the stocks, these are the stocks I think will do generally well, although they're not doing so hot right at the moment. And these are the ones I think are still having some more downside ahead. You'll see that Lowe's and Home Depot, Ford, Etsy, all, while I think are good stocks, have some downside ahead. And you can see I didn't get any singles here. So this is my op plan. And when, based on the fact that I think, based on the chart, I think Home Depot is going down. It looks like it's going down to me. I'm going to take down singles only based on my op plan. In other words, I think it's going to go down. So when I get a down single, I'll take it. I'm not going to take an up single until things change. The trend is definitely down until it reverses itself, which it doesn't look like it's going to do this summer. I think it's going to be a hard summer based on inflation and recession fears and transportation issues. I'm going to look for downward singles. I don't have one. The 3 indicator strategy says when the RSI comes back around, take a buy. When the stochastic comes back around, take a buy. And when the MACD is below the 0, which it's not, you take a buy. So the conditions are not right. But why would I be interested in taking a short on this at this time? This is Simply Wall Street. It's a free tool. A lot of it's free. And it's relatively cheap if you want to use it, the full version. It gives you about 30 analysis tickets. Anyway, this is the home screen, and this is my news reader, sort of. And it gives me news on my watch list and my portfolios. And I look for big green snowflakes if I'm going to do a buy, and red ones when I want to do a sell. And I look at the news to see if the news will affect it in any way. There's Etsy. I mentioned that's on my short list. And there's Home Depot. Adjustments to Home Depot's compensation targets may suggest a expected slowdown. That's not good. And so I can go do some further analysis with it. And if you're looking for a buy, you're looking for a snowflake that's big and green. The more green it is, this is not. This is an orange, almost a red. It's trading, it's undervalued according to Simply Wall Street. Earnings are expected to grow about 4 to 5%. That's not a lot. And it grew 14% over the past 5 years. It does pay a dividend. That's not bad at all. And these are the competitors. And you can see that Lowe's and Home Depot has about the same color. There's that downward slide on the charts. And let's take a look at this article. The nice thing, this is a well-written article in Seeking Alpha. But here's a summary. Their operating profit target is below the 1 year, which means basically that the profit is contracting. And that therefore the employees' executive compensation will probably tighten up. Let's take a look at a little further. This is the current price, and according to Simply Wall Street, it should be trading like that. And I believe it'll get there over the next 2 years, but I don't believe it's going there too quickly. Here's the future growth, and it's upward. That's not bad. There's the market, there's the company, there's the industry. That's not what we want to see for a buy. Earnings are forecast to grow slower than the U.S. market, and that's the past. This company is not going anywhere. It's not in a bad financial position. So if earnings are forecast to grow a little bit slower, I think that's going to affect the stock price. And this is another tool. It's free. Option AI. And we're looking at the expected movement of the market. And for Home Depot, the expected move over the next month is about 6%. Right there. Now the problem is you don't know which way it's going to go, one way or the other. And I looked at Palantir and Leo. That's two that everybody thinks is going to take off. Anyway, 6% over the next month, which puts it, if it goes down, it'll go down to about 253. 253. So is this stock going down to here, or is it going up to here? This way, or this way? When I was at Penn State, they used to say if yesterday's was a down, the next day is going to be a down too, based on probability. In other words, you got a greater chance of being successful if you bet a down bet, the continuation of the trend. Anyway, I think it's going down, and that's my guess. So if it goes down, what can I do about that? The call broken wing strategy is a short strategy. In other words, if the stock price goes down, you have a good chance of winning. Your net credit in your pocket tomorrow, if you do this trade, is $874, and it costs you, or risking, about $626. And your maximum profit that you can possibly make, if it ends up at expiration in between here, that's where you make your big bucks. But we're not concerned on that. All we wanted to do is take the upside risk off, the downside risk off. In other words, if it goes down, you're going to win. You have some upside risk, though, if it goes the other way. And if it goes down 6 or 7%, as we just seen in the expected move, that puts it right in this area here. So if it moves down there, and moves down there quickly, we can expect, I guess, about an average of about $300. And you can take that any time during that time, not wait for the end. If it hits that, and that's what I plan on. When I see its expected move, I plan on hitting it. And when it does hit it, that's when I take my profit. So 300 on a max loss of 600. What does that equal? 50%. And I have a chance of getting more. All it has to do is stay below 263. Short. Stay below 263, and it's at 270 now. Let's take one more look at that chart. It's got to move and stay below 263 by expiration. It's got to move 6%, basically. I ask you again, is it going up or is it going down? Please leave your comments in the description below. Please like and subscribe to your video. Remember to do your own due diligence. Like what you're doing. Have a little fun. We'll catch you on the flip.